Today's investment climate reminds me a lot of the old adage, there's don't ever scream fire in a theater. Why is that the mindset for today's investors? From my 41 years experience, what I see going on is investors are not really sinking their teeth into different investments. They're just taking bites and nibbles. And the reason they're doing that is that the financial or economic indicators are so unreliable. They're trading in different patterns than they've ever done before. There's so many macro events taking place across different asset classes. Everyone today seems like they're basically playing the game fire in the theater. So what does that mean in technical terms from my perspective? And I'm maybe not so technical, but just from the ideology of what the market is doing is saying, look, I can invest in the stock market because I can always get out before it implodes. I can buy stocks and trade them 24 hours a day. I can get in, I can leverage, I can use my margin account, or I can definitely get out. Even if the stock market begins to fall, I can always get out faster by cutting my losses. I can't really do that in crypto quite efficiently. There's not quite the robust market. It's not more of a global market, it's more of an isolated asset class. I don't want to be in apartments and real estate and traditional because that's long-term commitment. And right now I'm very uncertain as an investor if interest rates are going to go higher or lower. I'm very uncertain what the labor market looks like. I'm very uncertain what consumer spending looks like with rising energy costs. So today, from the experience that we have as a firm, from my experience as somebody who's been involved in investment since 1985, I look at the market today and say it's more about trying to position yourself in able to get out of a situation more than digging in and planting your roots or planting a cornerstone for the investment decisions you're making today. Now, this may or may not make sense to those of you who are watching this video, but it does have a lot to do with where you might be thinking about where you should be positioning your assets and your money. Why is that? Well, if I open the barn door and every single animal in the barn runs the same direction, well, maybe we end up with a log jam. Maybe we end up with all the animals in the barn going the wrong direction for the wrong reason, and now it's too late to turn back. You can't stop the movement of that flow. Well, you see a lot of asset classes right now that are being deprived of capital. You actually have more of a liquidation mindset than it is an aggregation mindset. You have a lot of different reasoning why people are moving from one asset class to the other, and it's not necessarily based on fundamentals or economics. So let's just say the Dow's at 51.7 today, 51,700 the Dow today. Oil is trading at $91 a barrel. We have natural gas at 345. We have cryptocurrency trading in the low 60,000. You start saying to yourself, well, if I'm involved in any one or all the above asset classes, do I have the right allocation? Do I have the right asset menu? Have I put in, is there other assets I should put in or some assets I should take out? So what you see is a fire in the theater mentality, which is, I don't know if I smell smoke or if my mind is telling me I smell smoke. I don't know whether I should watch the movie and relax and not worry about all the noise and chaos in the background, just stay the course. Or do I actually smell smoke and now I wonder where it's coming from? Is it coming from the theater I'm in? Or maybe coming from somebody burning popcorn in the background? I know these may be cheesy analogies, but it really is the mindset, because the mindset of investors really is what moves the market. See, markets are emotionally driven more than financially driven. If the preponderance of the investors out there are in the static mode, stay where you're at, status quo, hold your ground, don't go forward, don't make new investments, don't buy that motorhome, don't buy that new car, think about reducing your debt. But while you're still doing all that, the money you have in place, how do you allocate that for safety? Because you're trying to figure out which shoe is going to drop next, which asset class is going to go up, which asset is going to go down. I personally believe that the fire in the theater is probably the appropriate analogy that I see. Why do I feel that way? Well, I talk to literally thousands of millionaires all throughout the year. All of our internal partners are all multimillionaires. And when you start talking to somebody that's in engineering or banking or farming or ranching, or they run consulting businesses, or they're doctors or dentists or lawyers or all kinds of professionals, and you do that across all 50 states, what you find is you're learning very quickly what the troops on the front line are doing, what they're thinking, how they're making their decisions to go forward. They're truly a great reconnaissance source that I see much greater than Fox News or Bloomberg. And what I'm getting the general sense from most of the millionaires I've been talking to is we're not certain. So who is driving the stock market? What's driving the stock market? Is it pensions? Is it retirement plans? Is it hedge funds? Is it preponderance of lasting class? Not best in class, but lasting class? Lasting class means what? When I sell my Bitcoin, which is driving it down, and there's not buyers buying Bitcoin, it makes a perpetual motion for further decrease in Bitcoin's value. Well, where are they going with the money? Well, they're going to jump back into the stock market because there's not any other asset they can buy that has a chance for an upside, but gives them that one key ingredient, the exit to the theater if it ever catches on fire. Now, for most investors out there today, they're probably sub 45 years old. Most of you sub 45 never invested and had money of any relevance in the 2008 financial crash. So it's like talking about World War II. When you talk about 2008, it's like, what are you talking about? I don't even know what relevance 2008 has, because it's been, basically 18 years. But for those who've been through the 90s and the 80s and have been through the 2000s, and now especially the 2008 financial debacle and financial crisis, there are signs, there are indicators that says maybe the market in some degree is responding like previous market shifts that might be significant in shift. Do you want to be next to the door when the fire breaks up? Probably. Where do you want to be in the theater if the theater does catch fire? Do you want to be in the theater at all? Or do you want to be on the sidelines waiting for all the smell of the smoke to be gone? What I can tell you today, everyone is watching international news based on the two wars that are raging between Russia and Ukraine, Israel and the United States against Iran, and all the other proxies that are in the fight. We're looking at energy as being one of the most fundamental basic economic shifts that's cataclysmic across every single financial country and financial organization across the globe, because energy drives everything. I'll leave you with this thought. If you go back to the basics, Peter Lynch, who used to be one of the greatest mutual fund managers with Fidelity of all time, said if you can't draw it with a crayon, you have to have a little bit of concern. You have to have a little bit of residence and holding back, because at the end of the day, if it gets more complex, it also means it's got a more difficult absorption by the average investor. If the average investor does not understand the asset, the average investor avoids it. Today, we have AI data centers. We have AI in general. We have technology. We have all kinds of space investments. We have SpaceX coming out public this next week. We have Blue Origin. We have so much that is dynamically new, and that dynamically new investment or assets like NVIDIA, you can't draw a NVIDIA chip. I can't. So you say to myself, or you say to yourself, okay, if the market has gone from a nice stool with 3 strong legs, now it looks like we have 3 stools out there and I have no idea what they look like. It's upside down. I don't know what SpaceX and Blue Origin is going to do. I don't know what NVIDIA and all the other chip manufacturers are going to do. I don't know what the data centers are going to do now that energy prices are really high and they need cheap energy to make them economically work. If that's true, I might want to funnel down my concentration and focus on the very simplistic things that I can draw with a crayon. Tangible assets, real estate, things that I can walk by and see. I want to look for things that make sense to me in a very chaotic, fast evolving world. Fire in the theater is not hard. It's a very true adage, and it still holds true today. You know that once the fire starts, panic occurs, and when panic occurs, you can't stop the stampede. Today, investors are focused on the stampede. They're focused on the FOMO, follow everybody else, fear of missing out, move money from one asset to the next. And the truth is, it may not be exchanging assets that's important. It may be taking a breath of air and sitting on the sidelines until there's more clarity. Don't invest in fog. Don't invest in chaos. Invest because you're certain, or with some certainty, you know which direction your money belongs. I'm not giving financial advice. I'm simply sharing from a guy with 40 years experience, talking to thousands of millionaires every day, all day, for 40 years, what's going on behind the scenes. It's not apathy. It's uncertainty and fear that's taking hold right now with the average retail investor.